Finding high-growth stocks is as difficult as you may expect. You want to save resources and time, so it's essential to do a lot of research. However, the use of AI, most especially Chat GPT, might just change the game. To kick things off, we had to give Chat GPT a crash course on the kinds of stocks we're after. We started by asking for a rundown of the most standout high-growth stocks from the past 2 decades. And here's what it suggests. Chat GPT provided a list of the 20 best performing stocks ranked by their approximate growth percentages. As expected, most of the well-known names were on the list, including Apple, Amazon, Netflix, Tesla, Google, and more. We fed these names into our backtest software to examine the equity curve and the overall portfolio performance. Evidently, this initial portfolio was crafted with the benefit of hindsight, so the returns appear impressive. However, it's important to bear in mind that this is just the preliminary phase in familiarizing ChatGPT with the kinds of stocks we aim to find. We persistently probed ChatGPT to uncover the reasons behind these companies' exceptional performance over the past 2 decades, and here's what we found. Their success stemmed from various critical elements, such as a dominant market presence in an expanding industry, a history of increasing revenues and earnings, a flexible business model, a strong financial foundation, controllable debt, and a competent forward-thinking leadership team. Knowing that, we then asked ChatGPT about which stocks would have been selected 20 years ago based solely on these attributes and without any biased hindsight. 4 of these chosen stocks were included in the earlier list of top performers over the subsequent 20 years. However, let's examine the overall portfolio performance. It's evident that without any foresight into future growth, ChatGPT curated a portfolio of 20 stocks that yielded an almost 5,000% return, with a maximum drawdown of 52%. A breakdown of the results per stock is provided here, highlighting that Apple contributed the most significant gains, with a $5,000 position growing to over $3.5 million. Not too shabby, right? If we were to integrate the 10 and 20 EMA crossover into the backtest once more, we would still yield a robust return, surpassing the S&P index significantly. Additionally, we would experience a reduced drawdown nearly 20% less than the 20-year buy and hold strategy. In fact, upon analyzing the performance breakdown, it becomes apparent that the portfolio entirely sidestepped the 2008 market crash. The question remains, can ChatGPT identify the next Apple, Amazon, or even the next Google from a pool of 20 stocks for the future? Well, we didn't shy away from asking just that. First, let's recap. ChatGPT scrutinized the crucial elements of the top-performing stocks from the past and applied these same criteria to a portfolio of stocks that would have been selected 20 years ago, yielding yet another strong performance. Now, we've asked for the next set of high-growth stocks for the future, and here's what we found. Interestingly, the future recommendations once again encompassed some of the previous outperforming stocks. However, Apple was excluded. Curious to understand the exclusion, we inquired further and discovered several key insights. Other companies might have been favored due to their better growth potential, involvement in emerging sectors, or presence in rapidly evolving markets. Apple's mature status and high capitalization were noted as potential factors limiting its growth potential. Additionally, for the selection of the 20 stocks, the key factors encompass growth potential, innovation, strong prospects in industries, competitiveness, adaptability, and a commitment to research and development. Continuing the analysis, we pursued further inquiries focusing on the need for portfolio diversification. Notably, 75% of the chosen stocks belong to the technology sector, prompting us to seek an understanding of the rationale behind this concentration. Chat's response provided a solid rationale, citing sector growth, innovation, and scalability as primary reasons. Additionally, it highlighted its own advancements in artificial intelligence as contributing factors. Let's delve into the details further. One of the techniques we prefer for analyzing a stock portfolio is the bubble map. With momentum and quality factors as our preferred measures, studies have demonstrated that quality stocks exhibiting momentum tend to outperform in the long run, whereas stocks lacking momentum tend to underperform. Clearly, Chat GPT has primarily selected stocks with favorable quality and momentum factors, with CRISPR Therapeutics being the only one teetering on the edge of the underperforming category. When we input the stocks into a Stockopedia portfolio, sorted by market capitalization, we access various ranking factors. The primary apprehension arises from the low-value ranks indicating that the companies are costly. However, this is typical when searching for high-growth stocks, as expensive investments often become even more expensive. One of our preferred metrics is the Piotrowski score, which broadly evaluates fundamental quality and momentum. It appears once again that most of the stocks have favorable scores, except for CRISPR Therapeutics. So, what can we gain from the video? Well, it's evident that we are merely scratching the surface concerning the potential of AI. By simply posing a series of questions to Chat GPT, we can swiftly obtain the answers, which simplifies investment analysis. Who knows? Perhaps this portfolio will demonstrate an equally impressive performance over the next 20 years. Well, that's about it for today's video. If you found this video helpful, do consider liking it and subscribing to the channel. Thank you so much for watching, and we'll see you on the next one.